Yo guys, so welcome back to the channel. So in today's video we're talking about a hot new UK EV stock that will be merging through a SPAC stock and currently trading under the ticket symbol CIIC, and after the merger they'll be trading under the ticket symbol ARVL. So this company is called HYLIION, and this is a British startup company for EV vans and buses, which plans to go public through the Nasdaq, which means it will be trading under the US stock instead of a UK stock, which is a shame because it would be nice to have more UK EV stocks out there. So this merger will take place sometime in Q1 of 2021, so the first quarter of next year. So this stock was trading at $10 before the news of the merger. Then after the news it shot up to $13 same day, then now sitting at $17 cost base, so went up by nearly 70% just last week alone. But this is a general trend that we get with these SPAC stocks and these EV stock and the EV hype. We generally see a run up when an announcement is made, then you get short sellers who will take profit, then you get a pullback whilst you wait for the merger. So maybe there might be a pullback in this stock, but to be fair, I expect this stock to keep running up next week before we see a sharp pullback. So we saw this with HYLIION, we also saw this with WORKHORSE when HYLIION went up to $55, went back down to 17 post merger. We saw this with WORKHORSE, went up as high as 30, went back down to 15, whilst we're still waiting to hear news of the USPS deal. So yeah, we can expect a lot of volatility in this stock over the next coming months as we wait for this merger. So in this video I'll be going through the stock, the company, is it a buy, should you invest in it? But yeah, keep watching and don't forget to like the video and subscribe to the channel down below. But yeah, let's just get into the video. So like I said, the company is called HYLIION and it was founded in 2015 and builds EV vehicles from the ground up. So this company has designed its own sustainable and cheap material to construct vehicle, and it does so in micro factories that can be set up cheaply in basically any city around the world. So these micro factories are 20,000 square feet and can produce 10,000 vans or 1,000 buses, and the ability for this company to produce low cost EV vans and buses is by using aluminium chassis and composite to bring down the weight, which reduces the need for a heavier battery, which in turn reduces the overall cost. So yes, so this is a very low cost producing EV company that found a way to manufacture cheaper EV vehicle, which is very promising because, as you know, EV will be a thing of the future. So HYLIION vehicles are currently being tested on the roads of the UK, and this company plans to start commercial production next year in 2021. So they're currently building their first manufacturing facility in South Carolina, which is expected to be completed by the second quarter of 2021, and production is anticipated to start in the fourth quarter of 2021. So then after that, they do plan to construct another facility in the UK, which is only right because it is a UK stock. Whilst being in its pre-revenue phase, HYLIION has already secured 10,000 vehicle orders from UPS, which is one of the UK's largest delivery service, and this deal is worth around $400 million, with the option to add an additional 10,000 orders, so to double it to 20,000. So this is a potential $1 billion contract that they've got with UPS. So this order will be crucial for their positive cash flow and income and revenue, which is expected in 2023. So already this company is looking like a good long-term investment. They've got a large order, and if you compare them to another EV stock, let's say WORKHORSE, they're probably the US comparison. WORKHORSE had a total vehicle delivered last earnings of 7 vehicles. We're still waiting on the USPS deal, and this is a company who have got a deal with UPS, which is basically a UK version of the USPS. So this company is already looking to be in a better standpoint in comparison to WORKHORSE. Then this is their typical van, and I believe this is the UPS version for the and I believe this is the USP version for the USP deal, which, to be fair, I think this is one of the best looking EV delivery vans, definitely better than Workhorse van. And I think this is the bus. So yeah, this is the EV bus, which is a pretty standard UK bus, but with a modern twist, but nothing too nothing too fancy. Then they've got, so this is the full product they've got. So you've got the electric bus, you've got the van, the large van, and the small van platform. So as you can see, the electric bus and the van is expected to start production in 2021, and the large van will start production in 2022, and the small van platform will start production in 2023. So what this means is that we can have products as soon as 14 months time, which will align with their projections to turn over profit and cash flow in 2023. So this company currently has an excess of $660 million. 260 is money raised from the merger IPO, and 400 million is pipe investment from institutional investors, with one of their biggest investors being BlackRock, which is currently their largest shareholder, holding a 7.5% stake in this SPAC stock, which has provided the company with $118 million in funds to be able to fund the production and manufacturing of their US factory. So post-merger, this stock has been valued at a $5.4 billion for the combined company, the CIIG, and also HYLIION, the actual company. So I think this valuation is very high, considering they've not really done anything, or they're not doing anything currently. So this is nearly doubled from their valuation at the start of the year in January, which was 3.3 billion, and now valued at 5.4 billion, and nothing's changed. So it doesn't make sense, because the only thing that's changed is the announcement of the merger, which I thought doesn't account for the huge valuation. But that's just my opinion. Then they've also got a very impressive order, like we discussed. So on their website it says 1.2 billion, but when you do the maths, the USP deal is actually worth 400 million. Then obviously if they decide to double that to 20,000 vehicles or 20,000 vans, then that's nearly 1 billion. Then I feel like you can account the other 0.2 to maybe services or repairs. So yeah, so 1.2 billion in order. So this is very impressive for a company that's not even started production yet. And to be fair, this news, or this UK EV stock couldn't have come at a better time, because only last week Boris Johnson actually announced plans to ban all sales of new diesel and petrol vehicles from 2030. So this leaves more space for EV. So yes, EV will be the future 2030 onwards. So currently the sizable market opportunity for this company is 430 billion, but this greater shift towards zero emission vehicles and EV vehicle will only enhance this market opportunity. So for me, I thought this is a very good long-term opportunity with a huge growth and future potential, and I could definitely see myself holding this stock long-term. And as for short term, I thought this stock will be very volatile. We'll get a lot of volatility, especially next week and just months leading up to the merger. But this is nothing to worry about. If you're a long-term investor like myself, this is nothing to worry about. Just invest small by small. So I'm gonna start from next week. So I'm gonna put maybe 1/5 of what I have to invest in this company in. Then I'll keep buying on red days, and when we get dips, like we did with Workhorse, like we did with HYLIION, you need to learn from past stocks. So analyze other stocks to get like a general feeling or general prediction of where a stock could move, because this is basically another SPAC EV stock, and we've had a lot of those, especially in the delivery space. So you've had Workhorse, you've had HYLIION, so you kind of need to check and see the general trend. So we've got this run up to $17. We might get a further run up next week, but it might also dip back down, maybe even in a month's time, 2 months time. So it's a thing where don't fall into this FOMO, so the fear of missing out. So buy it when it feels right for you. So don't just buy it when it's at its peak because you fear this fear of missing out. If you think it's at a good evaluation, a good buying price, then buy it. But I always suggest don't invest all your money at once. So buy a small portion, then just keep adding to it. So if it has dips or red days, you can just add to it to lower your cost base and build your position. But yeah, regarding the stock, I will be making more videos just going through the stock and following the journey and leading up to the merger and even post merger. So yeah, subscribe to the channel to get updates, and don't forget to turn on your notification button, and also please like this video and let me know what you think of the stock down below. But yeah, we'll catch you in the next video. And also, don't forget, I'm not a financial advisor, so don't buy stock because I said to buy the stock. Make sure to do your own research and your own due diligence before investing your money into any stock. Thank you.